Good afternoon and welcome to the end of day review for today. And today is Tuesday, October 1st, 2024. So it's the first trading day of October, but it's a second trading day of week 40. We are in week 40, which is Q4, basically Q4. So we have overlap. So technically, yesterday is end of Q3, end of month and end of quarter also. So this week is the first week of Q4, but they have one day, in the Q3. So it kind of overlap. And on Friday, we're gonna have a high impact news, which is a non-farm payroll, which is fall on the first Friday of every month, and it's set up. Basically, it's set up the direction for the whole month, or for the whole quarter. Right there, we see that the third quarter is really rally. If we look at so right here, we have a quarter time frame right there. So this start the new quarter right there. You see that? It start October 1st. Yes. So today is the new quarter, and this one is closed on September 30, which is yesterday. And you see the last three quarters we are brawling, and here is start this quarter. So the high of this is 32.20, just below this, right? So that's in terms of the quarter right there. Yeah, let's look at the month. So here's the month of okay, so we have this is December right there, and this one is this August is a huge sell off, but it kind of flip right there. So basically September too. September we thought gonna be because have a setup right there. You see that? That is the Taiwan reversal right there. You have actually type 2 test from below and then reverse, but somehow this reverse got flipped and it continues rallying. So very interesting to see right here. We may see, because sometimes the reversal have the type 3, which is it just break that level and it reverse back right away. That's type 3 reversal. Sometimes we saw that it just reverse right away. So let's see. So we start the month with sell off right there. The sell off is we can see the setup from yesterday. If we look at the yesterday, it gives us some idea that we forgot to and here's the candle is yesterday beginning of the day, but we forgot to take the screenshot at the end of the day yesterday. Let's see. So at the end of the day yesterday, it start like that, right? At the beginning, it looked like it's gonna sell off. Not this one, but yeah, it looked like it's gonna break. You see that? It's gonna break. It makes sense because you see that right here. You see that level, and 57.94, 84.50. You see that break test from above 1, 2, 3, and this one is gonna be reverse, but somehow the reverse got flipped. You see, it got flipped, and we know that it set. This gonna be a huge, because it needs to set it needs to trap a lot of buy side liquidity or sell side liquidity for that matter. Yeah, it will be more accurate. Sell side liquidity. So today it really show up right there. You see, show up huge start at the 9:30. You see it yesterday. So basically, it starts show up, but it does not have much sell side liquidity. So it pulled back right here, or it reversed right there, and from there it make a second leg down right there, or just a expansion, and then it reversed all the way to take all the buy side. It did not hit this high. It did not hit this high in the PM, New York PM, Friday, but in the Asia, it did have that level. Very interesting right there. Okay, so it's go above that level. Yeah, so basically it rate the sell side liquidity of the pivot day. Oh, yeah, we need to put that into our note. And today we have to make the decision, right? Remember, we have the scenario right here. Basically, we have two scenarios. We need to wait for the 9:30 candle formation, or we just we'll have to wait. As soon as 9:30 come, all right, we go in and we swing right away, which is I think the ICT called Judah swing at 9:30 right there. So we try to build the model, or to understand the concept around liquidity run around at 9:30. And today it fall into the second scenario, which is we don't need to wait for 9:30. Why we don't have to wait? Let's find out. Because we see that it did trade right here. It did trade the previous day high, also the the previous New York PM high, and also the high of the day before. Yeah, so this, yes, the day before, and it rate that also. I will see that. So basically the setup before 9:30 is already there. The liquidity already taken. So there's no reason for go up here to take liquidity, because there are no buy side liquidity up there, because this one already rated liquidity from the New York previous day PM, and also the day before that. So very, very key right there. And then we have it rate or check out the high of London. It not only rate, all right. In rate, if we see that it just make a long wick right there, then it's rate. But this time it create a full breakout setup. You see that break test from above, and then reverse. So it's a very strong. Normally we want to see a double rate, right? We want to rate one more time, and then we know that it's going to be a Judah swing at 9:30. But you see, right before that, at 9:15, we already see the full breakout setup already forming. So going at 9:30 and swing, we did took risk trade, but we just aim for very low hanging fruits right here, which is just just London. But we learned our lesson that after this is the New York previous day BM range. One it rate the buy side, it's gonna rate the sell side. So we should have stayed in the trade longer. And as a matter of fact, when we are started today, we haven't seen this scenario before. We see that the London is inside the huge range from the New York PM, right? But we want the rate from here. But now the rate it kind of split, right? It rate the PM, and then it come down to London, and then it rate London. We haven't seen that before, so we little bit hesitation. But we check change right here, and it worked out fine for us. Let's look at the write up we have. All right, this is the write up we have for today. So you see that right there we have a 4 breakout type 1 reversal. It's a high level. If we want to go to detail, that's the right here. It's a detail right here. We dip down to detail. You can see at that level right there, 58, 10, 50, and this is the candle at 8:30 right there. You see 8:30 is one of the key level right there when they release the data. Right, the data released at 8:30. For today is the PMI. Excuse us, it's not PMI. Somehow 8:30 is, yeah, nothing much today. But anyhow, right here we see the pattern right there. You see that level it break, it touch from above, and then it's reverse at 9:15. 9:15, and you see the pullback right there. That's the signal to go along right there. We know that it tests from below, so it's gonna break that. I mean, test from above. If we mark down this level, test from above right there. So you're gonna break it. If we mark this level right, it's test from above. So it's gonna break it. You're gonna follow. So basically, it's a break, test from above, reverse, and we know that both the New York, New York right here, New York Friday PM, it was rated, and then the London also the buy side was rated, but it rate different right there. It rate and then it come down. It rate the London. The other scenario we have, the scenario we have before related to this setup, we see that right here. It also, you see that the London range is inside the New York Friday PM range, but the rate right here is different. It rate both of them right before 9:30. You see that? But in this case, we have to gives us, it doesn't have the rate right here only for the London. The previous day already rate in the in the 22 hour, not right before the 9:30. So that is another variation that we add into our arsenal right there. Yeah, but you see that the beautiful one right here is between the range. When it's the London between the range, then what was for the liquidity sweep on one end, then it's gonna go down and sweep another end. That's exactly happened today also. You see that right here, right? It sweep this end, the buy side, it can come down and sweep the sell side right here. Yes. So basically right here we have here we have a note very detailed right here. So in this case we don't have to wait for the 9:30. CF is stand for candle formation. We don't have to wait. And this is the ICT called Euro swing at 9:30. We swing right away at 9:30 because the liquidity already set up and sweep before 9:30. So we don't have to worry that 9:30 is gonna retrace right here. No, it's gonna follow this direction, the downwards direction, because look at right here detail right there. You see The London range is inside and near the top of the New York Friday PM range right there. And then you have the New York PM range, the high, and London high were taken. They both taken by a 4 breakout. You see right here, 4 breakout. You see it break and then it reverse. That's a 4 breakout type 3 right there. It's very unusual. Normally it's gonna be a type 1 or type 2. Type 3 is very rare. And right here we have a 4 breakout right here. Excuse us right here. Before 9:30 right here. You see at the London high right here, break, test from above, reverse. That's what we mean by that. The high of the London and the New York both taken by the 4 breakout. That's mean, you know, the setup, or the motion is already in the place. That's the reason why at 9:30 we can go in and swing. I think that's the reason why ICT coined the term that is the Judah swing. You go in swing right away at 9:30. So basically today we have a Judah swing setup, very perfect setup, but it provide a new insight or a new condition for us right here. The condition which is right here, we see that the rate right here is split. Now before today we see that the rate happened when it rate both the New York PM and London range at the same time. But here it's split. It split the rate right here. So it swept the liquidity PM and then it come down, it swept London. So that's the variation right there. Just take a look at the previous example we have. Here's the previous example we have. It took place on September 11 right there. So you see that it's a Judah swing right here at 9:30. So we don't have to wait for the 9:30 candle formation, confirmation. We see at 8:30 it already start down move, and then it create a setup right there. Right. So the 8:30 is one of the critical time reference for us to looking for this kind of setups. But go back to the point that you see right here, when it right here at 9:15, it rate both the London and the PM. But today we see that it's split. The first rate is just for the PM, the New York PM, but the second rate is for the for London. So that is another variation right there, another use case for us to study. So next time we know which use case gonna be fall into this setup. So here's another example that just happened a couple of days ago, is in last week for that matter, is in September 26. So you see this is the Judah swing at 9:30. And we see that in this scenario, you see the rate right here, it rate both London and New York PM. It's just one rate. In this case, it double rate right here, right, both of them. But the scenario today is it kept split first rate and second rate right there. It did not take both at the same time. But for example, we have on September 26. Go back to December 26, please. Oh, right here. So it's just one rate, but the rate both high right here. But another thing that this setup is very high quality because it double the rate. You see that we call it a double rate right there. Double top or double rate, it rate both. At 7 o'clock it rate the London high and the New York PM high, and then at 9 o'clock it rate one more time. It create the 4 breakout setup right there for us. So the candle right here, I think let's see, so it's a 9 and 9:45. That right? 9:45. Excuses. 8:45, 8:30. So yeah, 8:30 and 8:50. So the setup right there is around 8:30 and 4:50. So the 8:30, the 8:15 set the range, and then you see the setup right there. So test from below, break and reverse. That's its type 2 reversal right there. So for the setup that no wait for the 9:30 candle formation, we have both. We have both scenario related to the New York PM range and the London range. So in this case, they are not overlap, right? But we do have the case that where they inside, like today, right? You see that London is inside the range of the New York PM range. The same for here at September 11. The same idea. It do what? It do have the inside right there. You see that? It's inside the previous PM range right there. Okay, so it's we have seen that both. So and in this case, we do have the double rates right here. Double rate for London, but not double rate for the PM. And that could be a very good set for you to swing the 930 right there. Okay, so go back here. We see that scenario right here. We see that the for the ICT price deliver model, right? So we have the case right here. It's beautiful to illustrate right here. So we have a consolidation right here. Right here, the consolidation is within the PM range, and then we have what? Consolidation, then we have a expansion, and then it reverse. So they have the consolidation and expansion, and then it go to retracement, or in this second case scenario is go to reversal, which is this one. Expansion, then it reverse. Reverse, that means you're gonna go out and take the other side of liquidity. It will not retrace. If it retrace, then it just stop right here and make a non-leg down. So keep in mind that it never go consolidation, expansion, and consolidation. So basically right here is already consolidation. It's gonna be what? It's gonna be expansion. It will not consolidation right here. It will what? It will retracement reverse. There's no consolidation right here. So that's an idea. It takes us for a while to to understand the concept on ICT price deliver model. I mean, some concept it just takes time. We have to be patient with ourselves. We're not gonna get right away. It takes practice. Spend time with the charts and analyze. So basically, right here, the ICT, the wheel of price delivery right there. So we have 4 state right there. All consolidate can start with consolidation, and then it's jump into expansion. So there will never be expansion go back to consolidation. When the cancellation, then the two states that it's gonna go into, you go to retracement or you go to reversal. Yeah, it never go back to consolidation. But the trick that where you gonna locate, where the location you're gonna put the consolidation, that will help you to understand right there. Some people not quite understand the scenario. I mean, it's like us before, right? But now we get a little better. Here's some guy on Twitter or X. Basically, he write this one. I mean, he didn't listen to the audio. The audio ACT say very clear that that's when everything start with consolidation, and when it go to consolidation, it will never go back to it never go back to what, to consolidation. But actually he numbered the step right here. It could make sense. So basically step 1 right here, step 2 is gonna retracement, or step 2 right here it go to reversal, and right here it gonna retracement, step 2, and then it go back to expansion. Okay, so right here he put right here expansion to consolidation. So right here, so basically the step is 1, 2, and then 3. It will expansion. So where the 4 expansion and go to consolidation. So 1, 2, and 3, and a little bit confused right there. But anyway, the point we try to make that it never go consolidation, goes expansion, and go back to consolidation. You have to go through retracement and reversal. We will revisit this, the right ICC price, the delivery model later, or when we go have time to do a deep dive. But anyway, one more thing we're gonna take a look is this beautiful setup. So basically we have both scenario. Case number 1 right here is that we don't have to wait for 9:30 because it's 9:30 US swing right here, so we don't have to wait them for 9:30 confirmation right there. So basically we have expansion right here to the downside, and then it have a non-leg down right there. So it's 2 leg down, first leg, second leg, and look at the second leg, it's near the bottom, and then it gonna retrace. Right, you have expansion, and then it gonna 2 leg right there, retracement, and another expansion move right here. It's gonna reverse, so this is called a reverse, or actually it's called retracement. Right, you have a retracement, expansion, and then retracement right here. All right, because this retracement, it will become reverse if the whole thing go and take the other side of liquidity. Like this case. This case is a reversal. It's not retracement, because it take the other side of liquidity right there, which is the PM and the London. So that's the case 1 right there. And then the case 2 is right here. We have to wait for the 9:30, because at the 9:30, it actually at 9:30 you see that it did rate both. Before 9:30 it did rate both the London, it gives us the New York PM and the London. But the trick is that on the left side we see the huge what fell up right there. So it's better for us to, and also it's in the range right here. So it's better for us to wait for the 9:30. And as soon as 930 the 930 formation, then we look for the trend right there, the range right there, mark the high, the low of the 930. In this case, we mark the high, so we're going to see the setup right here. Right after that, you see that is break, test from above, then reverse. So that is type 1 reversal right there. We can go and they become a swing for right there, beautiful swing all the way down to last day. So the retracement did happen a little bit right here, and it make another expansion move right there. You see the retracement. And one thing we point out right here, you see the retracement for this two case is similar. The time a little bit different right here is about 1:15 p.m. It's 2:30 p.m. But the retracement sort of very similar. You have a hammer candle right there, and then boom. So the low hanging fruit for us is gonna be M for this high right here, this candle high and our close right there. We M for this candle low right there. See that? Right there. And here's the scenario where we also wait for the 930. Two of this case is wait for 930. This one you don't have to wait for 930. It's a Judah swing at 930 right there. And this one you can call is the Judah swing after 930. So you have to wait for 930. So that's the whole idea of ICT Judah swing at 9, before 930 and at 930. So basically we have to wait for the 930 to formation. These two right here, we wait for the 930 and you mark the high. You see right here, right here is just a little bit different than this stuff. So right here you see this scenario right here, you just mark the high of the 930. Right here you mark the high, but it go up one more level. You see that one more level? You can see that is I think this candle is at 11. Let's take a look real quick. Yeah, we couldn't find the other screenshot, but this right here, this candle right here. So the thing is at 11. Mark one more round up with the 930. You can see that right here. You can see break, test from above, and reverse. That's type 1 reversal right there. And remember, this candle is supposed to be the what? To break, test from above, and reverse right here. You see that? The reverse. But this reverse got flipped. See that? This reverse got flipped. This got flipped, then we have to wait for the setup just at this candle right there. When it breaks that level, you're going to see a setup, and then we can short from there. So that's a very beautiful setup also. You don't see the fall breakout at 9:30, or the fall breakout got flipped, then wait for the next opportunities at the candle where the flip happened. Wait for that, then boom, it's going to come down. And you see the fair gap right there. This is the second leg down. And if you see it's a huge move, then it's gonna retrace very, very fast. If the retracement very strong, then it turns into reversal right here. And we can see that the retracement right here is engulfing candle. Basically, this one is engulfing the download candle right here. Then we can have a reversal turn into, it gives us is a retracement into a reversal. Right here, it doesn't have engulfing candle. You see that? Then it's just still a retracement, and then it make a leg down. And right here is also a retracement. It's not a reversal at all. It make another retracement right here. It cannot break. Cannot break the high of this. So that is another detail that we need to pay attention right there. But it's a beautiful setup. You could ask for a better setup like that. So our whole purpose is we have to understand the liquidity run. That help us to better entry and better stay in the trade or better execution right there. All right, I think we run out of time. We thank you for your time and interest. We're always grateful for the opportunity. We do what we love, then success coming our way. Day by day, little by little, in every way, we're getting better and better. Thank you. Have a great evening and see you tomorrow.